Hello and welcome to Commerce Gyan, and wishing all the viewers of Commerce Gyan a very happy Diwali. Diwali season is a very special time period for people in India because everybody is so eager to buy either gold or silver on Dhanteras. So, should you buy gold or should you buy silver? Because it is just not a sentiment, but also many people feel that it is like an investment that can be helpful in good and bad times both. So basically, we find that this yellow metal specifically is very attractive to most Indian people. Not just that, many people are also attracted to silver as an alternative to purchases. So today in this video of Commerce Gyan, we are going to understand whether or not it is really and truly a good option to buy gold or to buy silver or to buy both or neither of them. And sometimes people make few mistakes when they are buying these precious metals. So to avoid that, you need to know and understand a few important things which we are going to discuss in this particular video. So be patient and see the entire video so that you get each and every detail of these precious metals, the profitability, the investment value, the sentimental value, everything we are going to talk about in this video. Also, just in case you haven't joined the journey of Commerce Gyan, where we're going to talk about different subjects of commerce, and it will be from a very practical viewpoint that we will be discussing finance and commerce. So, if you have not subscribed, do subscribe to this channel of Commerce Gyan. So, let's begin today's discussion. So, our key discussion points will be as this. First thing is whether gold or silver is an investment. Okay, many people say it's an investment in hard times, it helps us. Even in good times, when we want to expand our business, gold comes to our rescue to raise funds. Then it is argued that gold gives better returns than even equity sometimes because it's safe and it's secure and there is no tension about this particular metal. Also, silver, many people prefer to buy and keep because it has an incremental value. So, this is something which we are going to focus upon whether really gold or silver give us the needed returns, and is it a myth that they give more returns than fixed deposits or any kind of investments that we have as alternatives, and is it really safe? That is also what we want to see. Or second point, is it just having sentimental value? That means we say, okay, it's a festive thing. So if you're wearing gold, if you're wearing silver, then it has certain important religious importance. It has festive importance, and it's considered auspicious to keep gold and silver utensils, or even sometimes wearing jewelry on certain occasions. It is very auspicious, and it is very much necessary, specifically in India. So we are going to see that whether it's, so that is one thing why people buy gold or silver. Now, what are the benefits associated with buying of these precious metals? That is what we're going to focus upon. And finally, we are going to see the risks that are associated with these precious metals. So first of all, let us consider gold. In the case of gold, I am going to give you an entire, you can say, right from the beginning to the end till date, what is the change in the gold price we are going to see. And we are going to also match this change in the price of gold that has happened with the compounding value at a particular rate of return. So we'll see whether it really has that potential which we normally speak of. Then consider the liquidity. Yes, definitely gold is a very liquid, you can say, kind of an asset. Any kind of emergencies and things, you can actually sell off gold and get it. But remember, there are key important factors which liquidity and those factors, if we consider, gold may not be that beneficial. So let's take the example of a fixed deposit and that of gold. If we consider a FD of 1 lakh rupees, and if we consider investment in gold of 1 lakh rupees. Now, most people, when they invest in gold, they're not going to buy those coins, or they're not going to buy the actual gold of 24 karat, which they're going to keep aside. They will buy jewelry. So when you buy jewelry, it has making charges, so it becomes more costly. It also, sometimes you find that when you're talking of gold, it has reduction in the value when you want to sell it. If you keep jewelry or such kind of ornaments with the bank as mortgage to get a loan, they normally give you only 50%, right? Even sometimes less. So if you're going to take gold as a liquid assets compared to FDs, it will not be a beneficial asset at all. So liquidity wise, I would say that fixed deposits are a better and a much safer option compared to gold, because gold today is becoming riskier even to wear on the streets. There are people who are chain snatchers, people who are we find theft is happening of gold jewelry. So it's not safe to wear gold any longer. At the same time, keeping it in your house also attracts thieves and attracts people to actually cause a robbery in your house. So that's also a bigger threat. So stability wise, if you look at, yes, gold has been a stable metal because there are so many buyers, right? So if you, even if you keep the gold with you, you know that there will be somebody else who is ready to purchase. So if you give gold to somebody, they will definitely hand over cash to you. Nobody is going to say no, I don't want gold, right? So if you say stability wise, the growth potential, the pricing also is there, liquidity also, yes, it is there, but it is not safe. Then value of beauty, of course, that is something which is sentimental, and it is specific to individuals, because people in India, both men and women, love the concept of gold jewelry. So specifically on festive occasions, yes, that part you can keep aside. If you have a hobby, if you feel that okay, I like to wear gold, then it's fine, you can actually buy it. That's not an issue. But if you're talking of investments, I will show you a quick example which will give you some eye-opening points where you find that investment potential of gold matching with other investments, how much it is. Let's see that example. Okay, to understand the growth potential of gold, I'm going to give you a very simple example. Let's see the gold prices from the year 1981 till date. So you have up to 2024, you will find that there is a lot of increase in the gold price. So if you look, if I had an investment of 1670 in the year 1981, today the value of that would have been 71,510. That is what you would say, and you would feel happy, okay, I'll buy gold this year also, so that after 10 years I will get huge returns. Wait, before that, let's check the investment potential of gold, whether it's really that good or bad. So let's take an example. In the year 1981, I am going to invest a value of 1670 in gold, and versus I'm going to invest it in some random investment which is also investment of 1670. So I'm going to take a site on which I get a compound interest estimate. I'm going to put 1670 on this, 1670, and 10 years down the line, 12% return I'm assuming, and I'm going to calculate. Okay, you're going to get 5187, 5187 after 10 years. So in the 10th year, so this is the first year, in the 10th year in 1990, how much is the investment here? 5186. Did you see this? So you had invested 1670 in gold, you got 3200. I'm just assuming exact you're getting 3200. I'm not even taking into consideration the amount that may be reduced because of wear and tear, right? So you had jewelry which you had worn, and so when you take it to the person, sell it to the valuation may become less, and then you don't get even 3200. So this was 5186 in a random investment of at 12% interest. Let's take again. In 91, I invest 3466. Okay, in 91, 3466. Same 10 years period, 12% annually, calculate. I'm getting how much? 10,764. Let's see what is the state of gold. 4,400. So 10,764. So I'm not even taking the compounding right from beginning. So 10,764 would have been the investment at 12% if I would have invested in 91 till 2000. Take one more year. Now let's take a random year of let's say 2010, 18,500. Okay. So we take 18,500 here and we compound it. 10 years, 12%, and calculate. So you get 57,458. First year, second year, third year, fourth year, fifth year, sixth year, seventh year, eighth year, ninth year, 10th year. How much did you get? 57,458. If you look at that Excel sheet which was showing you the gold price, plus if you look at the compounded values of the figures that I had invested at the rate of 12%, you had seen that the gold prices that increased and the investment increased, there is a huge difference. In fact, if I would have had a diversified portfolio at the rate of 12% per annum instead of buying gold, my investment valuation would have been much better. Also, I don't have to worry about the safety. I have to keep at home, I have to keep it in a locker rent is there. Then I have to pay for the making charges if I buy jewelry. Then when I go to sell the gold, there are problems because of wear and tear, and I get a lower price. If I go to a bank and take a mortgage loan, they don't accept the entire valuation of gold. If the same thing I do with let's say a fixed deposit, I get 75% of the fixed deposit value, which does not happen in the case of gold. So if I pledge, or rather if I just keep the fixed deposit as a security with the bank and say, give me a loan. Some banks even give 75% to 80% of the FD as a loan, right? So which one is better, which one is safer, and which one is having more liquidity value, you decide. So if you want to buy gold for a sentimental reason, it's fine. But if you want to buy gold as investment potential, be careful and think twice before you do it. I'm not saying it doesn't have investment potential, but comparison to other investments, it may not have that much of investment potential necessarily in all time periods. Now we are coming to silver prices. Let's see whether silver also performs in the same way as an investment potential. Let's check. So if we find 81, the silver price was 2715. In 91, it became 6646. In 2000, after 10 years down the line, it became 7,900. So in 91, it was 6646, and it just it has become 7,900. Then coming to 2010, it has again jumped 27,255. Then in 2020, it became 63,435. Okay, so let's take an example. Let's take it from 91 to 2000. 6646, if I am going to invest now, let's try and find out. Again, using the compounding formula, I am going to invest this 6646, and for the next 10 years, I will invest this. So let's move to the compounding part. 6646. 10 years, 12% return, annually compounded annual value I'm calculating, and I have got 2641 as the 10 years of compounded value. So in 91, if I would have invested the same value of 6646 in another investment, and I would have reached the 10 years gap. So in 2000, I would have got how much? 2641. Now again, you decide what is better. Coming to the investment, let's say made in 2001, 7215. Initial investment 7215, length of time 10 years, in between no investment, 12% return, no variance. I'm taking calculate. Okay, so it comes to 22,406. 22,406. Silver this time performed better, a little better, right? Then let's take 2011 now, 56,900. I have invested again 10 years, 12% return. I'm calculating 176,723. and 76723 is what you would have got in 2020. Now, if you see both the cases, in both cases, we find that even in the case of gold and even in the case of silver, we find that investment potential, if you see compounding wise, the investment potential of other investments is much better as compared to gold or silver. So when you're going and buying gold or silver this time at Dhanteras, be careful. It is in definitely an investment. I'm not saying it is a loss-making asset. It's not loss-making definitely, but the growth potential, or if you look at the figures and the numbers by which the gold and the silver prices keep rising in comparison to other investments like mutual funds, it could be even fixed deposit, it could be the stocks and shares which you have in the best companies, this growth potential is quite less. So I've just taken 12%. There are companies and there are shares which give even higher. I'm not considering that. If you diversify your portfolio in the grouping of shares, mutual funds, fixed deposits, and then come to an average of 12% of return, this will give you much, much better performance as compared to buying gold or silver in the format of jewelry or in the form of just a precious metal. So sentimentally, if you go and buy it and there are emotions attached to purchase of gold, it's an auspicious thing, it is a religious importance, go ahead. But don't keep in mind that I am doing a very great investment and then it's going to give me a really good growth potential. Then you are making a mistake probably, because there are many risky factors in terms of gold and silver also in comparison to other investments. So if at all you really want to buy gold as an investment, then keep these points in mind. You have to have an investment term whereby you may find an increase in the gold price. So you will have to decide how much time you want to hold it as an investment. Secondly, it could be purchased if you want just a very pure liquid, you can say, investment. It's more like liquidity preference. So even above the fixed deposits, because you may have to go to a bank, gold you can actually go and give somebody and just based on that you get the cash immediately. So thereby you may find that gold is more liquid in comparison to other assets. So that could be a preference of some people. Risk preference, if you see gold, its risk is there, but if you look at other forms of investments, like if you find shares of small caps and other things, they may be a little more risky than if you're talking about gold. Gold is always considered to be having a steady investment value, a stability in the market. It has recognition. It's not like something where you find that gold is not going to be sold out. So you don't have the pressure of you can say buyers missing, or there are no buyers in the market. You will have buyers in the market for gold. So that's why your risk preference, you will have to decide and buy gold. And finally, if you are okay with buying a 10-gram thing for a high value as close to 75 or 80,000, it's your wish. So it, in accordance to silver, if you see silver is having low value, you get 1 kg of silver in the same value as 10 gram of gold. So basically, you will have to decide what is your preference. Then if you see silver, if you prefer silver, then again there you will have to see the investment preference, investment terms that are there, and you will have maintenance of it, right? Because if you buy silver all the time, you will have to keep taking care of it. It becomes a little blackish, then you'll have to clean it, keep it well. As compared to gold, it has a little more maintenance value. However, you will find that silver is having, you can say, industry value also. So industries require silver in many cases. So there is an industrial growth in terms of demand. So when silver will get more and more used in industries, it will have higher demand, and obviously the price is going to increase. So there will be real returns and real growth. Then low value. So if you find somebody buying silver, they can have a bulk of that metal in the same price as gold, right? Small gold pieces you will get, and here you will get a bulk of the precious metal silver. So you have to decide that what you want. And finally, what is your risk taking ability? That will also be taken into consideration. Gold prices fluctuate a lot in comparison to silver. So silver is having a steady rise in the prices over a time period in comparison to gold. It doesn't have much, you can say, fluctuations because of the industrial demand. So even if the fluctuations are there, you can say they are more and more in terms of rise in the silver prices. So preferentially, see, both are good enough, but at the same time, if you're going for gold purchase, if you're going for silver purchase, it has its own pros and cons, which you will have to take into consideration. So now that you have seen the risks and the investment potentials, the whether really the gold prices and the silver prices rise in comparison to other investments, we have seen everything with the help of supportive figures in this particular video. So hope that will help you in the purchase of this silver or gold, and depending on your sentimental value, buy gold or silver, but not to a very huge extent, because gold and silver definitely is having its liquidity potential, its value as an investment, but there are many other investment uh, there are many other investments available in the market which can have a better and a bigger return potential in comparison to these two precious metals. So it's up to you to decide now. Based on this video, I have just shared my opinion based on whatever data you can see in this particular case. So wishing you a happy Diwali again, once again. And if you like these points mentioned in the video, do share it with people who may also find it useful. Put the like if you have liked this particular video, and also put your comments down in the comment section, whatever you feel about these things. So hope to see you in the next video of Commerce Gyan. Thank you.